Hi, Stan the Annuity Man, America's Annuity Agent. Welcome to Stan the Annuity Man YouTube channel. You clicked on what is annuitization? I mean, what the heck is that? It's hard to spell, it's hard to pronounce, but annuitization is really a way of getting income from an annuity, whether it be for lifetime income or a specific period of time. We're going to go through all of that. I hold in my hand the trusty marker, which means I'm going to be walking to the whiteboard after this musical interlude. All right, so let's talk about annuitization a little bit more from a standpoint of how it works. If you're from the South or you grew up in kind of a rural area where you had a house with outdoor faucets, spigots, we call them spigots in the South where I grew up in North Carolina, annuitization comes down to if you rip the knob off a spigot, water's just gonna flow. You can't do anything about it until you call the plumber. So annuitization is ripping the knob off and income stream is going to flow. It's gonna hit your bank account really until you die, or if with a lifetime income stream, or for a period certain, it's going to flow for that period certain. So we're going to talk about that, and there are three primary types of annuities that use annuitization for their income streams: single premium immediate annuities, deferred income annuities, and qualified longevity annuity contracts. Now you can get quotes on all of those at theannuityman.com. We have the best annuity calculators on the planet that will shop all carriers for your specific situation. So with annuitization and all lifetime income streams, we need to know specifics from you to run the quotes and for you to get the best quotes from all carriers. We need dates of birth or date of birth if it's just you, dates of birth if it's joint. We need your state of residence. We need when the income stream is going to start. We need what type of account. And then we need the amount of money that you're going to put into the annuity, or how much money you want to create on a monthly or quarterly, semi-annual, annual basis. Most people have a monthly income stream, so we can reverse engineer the quote. So in essence, you can say, okay, how much does $200,000 pay me and my wife for life? Or you can say, me and my wife need $2,500 a month for the rest of our life. How much money will it take to create that contractual guarantee? Both of those we can run for you, those quotes. But annuitization is just a combination of return of principal plus interest. In fact, all annuity income, regardless of the type, is a combination of return of principal plus interest. And you gotta say, wait a minute, you're telling me they're gonna give me my money back with interest. Is that a good deal? It is if you live forever. I mean, you're transferring the risk to the annuity company to pay you for the rest of your life. And only annuities can provide that. Only annuities can provide that guaranteed income stream that solves for longevity risk, which is the fear of outliving your money. So what's the return on investment on a lifetime income stream? I really don't know that until you die. But let's go to the whiteboard. I'm gonna walk to the whiteboard. By the way, I don't know the return on investment until you die. Up until that point, it's a pure transfer of risk. So you either find benefit in that or you don't. But if you love your Social Security, you're going to love a lifetime income stream annuity because they're the same thing. If you love your pension, you're going to love a lifetime income stream annuity because it's the same thing. So one more thing before we start. With annuitization, let's just put the big A, right? That's for annuitization. You can do it two ways. You can do life or joint life, or you can do a period certain. Now, let's talk about the period certain for a second. A period certain is obviously not for your life, it's for a specific period of time. And you guys say, well, why would I do that? Let's just say you need a gap of income fill. Let's just say you need 10 years of income until something else kicks in, whether it's a pension or Social Security or something like that. I had a call the other day and a guy said, hey, I need 11 years of income. After those 11 years, I've got a pension kicking in, my Social Security is going to kick in, but me and the wife need income for those 11 years. So period certain can be any year. It could be 3 years or 5 years or 7 years or 11 years. And again, it's a combination of return of principal plus interest. The primary pricing mechanism is not your life expectancy, it's interest rates. So interest rates drive the pricing train. So when we send you the quotes, you're going to see, two columns. You're going to see you're going to see income, what the income is, and then you're going to see what's called the exclusion ratio, which is the part that you do not pay taxes on in a non-qualified account, non-IRA account. And that's the return of principal. You'll pay taxes on the interest. Okay, so that's period certain. That's one way to do it. Life is the other way to do it. You can do single life or joint life. So single or joint. That's your choice. Single life is going to pay higher because why? They're backing up the income stream for one life instead of two. But you can set it up joint life so that when you die, when your legit hits the mountain, your spouse or partner is going to receive the income stream uninterrupted and unchanged for the rest of their life. Now, with this, most people say, hey, I don't want to do that because the evil annuity company keeps the money when we die. Well, that's only if you want that to happen. That's called life only, all right? But you don't have to do that. You can say, I want single or joint life with installment refund or with cash refund. Installment refund means that when the second spouse dies in a joint life scenario, whatever's left in the account is paid in payment form until the money is exhausted. Cash refund is when the second spouse dies, then whatever money's left in the account goes lump sum to the beneficiary. So that's kind of how annuitization works. It's a combination of return of principal plus interest. You do not have to do a life only. In fact, you could also do with installment refund, cash refund, you could do a life with, take a period certain, with a 15-year certain. So let's explain that. So it's on your life, it's going to pay for the rest of your life regardless of how long you live. You can live forever, they're on the hook to pay. That's the annuity benefit proposition that only annuities can offer, lifetime income. But let's just say you died in year 5. If you died in year 5 with a life with 15-year period certain, then there's 10 more years of payments for your listed beneficiaries. If you died in year 12, then there's 3 more years of payments for your listed beneficiaries. If you died in year 16, no payments to the beneficiaries. But you can customize how you want the annuitization structure to work. In fact, you can get as detailed as you want, but let's just say there's between 30 and 40 different ways to structure an annuitization payment. So remember, annuitization is ripping the knob off a faucet, okay? The income faucet, income's coming for life, but it's customizable to where you can set it up to where it's going to work exactly how you want it to work. And the conversations that me and you are going to have, and yes, it will be me, 99% of the time, I'm going to ask you questions so that we can drill down to exactly how you want the contract to work, keyword contract, and then I'm going to go shop all carriers to find that highest contractual guarantee. Okay, back. I've done another video called Annuity Income, How to Set Up Your Payments, which coincides with what we're talking about here. But remember this, with annuitization, that's the big A, right? It's return of principal plus interest. For example, if you put $100,000 into an immediate annuity and you're getting return of principal plus interest, but you outlive your life expectancy, which means that the account's at 0, the annuity company's still on the hook to pay. That's the reason I always tell people there's no return on investment until you die. There's no ROI until you die because the annuity company's on the hook to pay regardless. So with that, I encourage you to go to my site, theannuityman.com. You can use the calculators we have there yourself, or you can have us work with you to develop a customized plan. In fact, it will be me 99% of the time. So I look forward to that conversation. And I also will send you my books. I've written 6 owner's manuals on all things annuities. I will send you those for free and under no obligation. They're hard copies, but no cost to you. We'll just send them. I need you educated. I need you to understand what you're buying. I need you informed, and I need you to make a decision on your terms and on your time frame. So with that, I will see you on the next Stan the Annuity Man video.